Good morning and welcome to 7 at 7, your daily financial news capsule to get you clued in for the day. It's Thursday, the 3rd of October. I'm your host, Anirban Chaudhary. US energy companies' shares gained on Wednesday as crude oil prices climbed 3% on worries of an escalation in tensions in the Middle East. This happened after Israel and the US vowed to respond to Iran's missile attacks, about 180 ballistic missiles, most of which were intercepted by Israel and the US. Tehran meanwhile said that any retaliation would be met with vast destruction, raising fears of a wider war. Brent futures climbed $2.26 to $75.82 a barrel. The S&P 500 energy sector climbed 1.4% to hit highest in over a month, while the broader indexes slipped. Remember, global industry data said that Iran's oil output rose to a 6-year high of 3.7 million barrels per day in August. An attack on Iran's oil infrastructure could provoke Tehran to respond with a strike on Saudi oil facilities, similar to one conducted in 2019 on crude processing facilities there. Meanwhile, a strike by 45,000 dock workers in the US, East Coast and Gulf Coast ports that we spoke about yesterday entered its second day on Wednesday, with no negotiations currently scheduled between the two sides. The strike will disrupt shipments from food to cars and may even stoke inflation. President Joe Biden's administration has put pressure on US port employers to raise their offer to secure a deal with dock workers to end the strike. Here's more on global markets. Elsewhere in Asia, South Korea declined 1.2% and Japan was down 2.2%. Taiwan rose 0.75% and Hong Kong jumped 6.2%, maintaining its newfound bullish momentum driven by China's stimulus package to revive its economy. Mainland Chinese markets were shut. On Wednesday, US markets edged higher but were near 2-week lows. The Indian markets were closed on Wednesday. Stocks may weaken on Thursday due to escalating hostilities between Iran and Israel. You know where else investors have been flocking to for safety amid geopolitical tensions? Gold. The yellow metal touched a new high of 78,300 rupees per 10 gram on Wednesday due to safe haven buying amid escalating tensions in the Middle East and lower US bond yields. Market participants are expecting prices to rise further if uncertainties worsen. Experts said that markets like Zaveri Bazaar are buzzing with activity due to the price increase. Footfalls have actually increased by up to 20%. They said the Navratri festival, which will start on Thursday and continue till October 12th, may see further spikes in prices. Consumers are buying gold jewelry for the upcoming wedding season that starts in November and continues till February-March. Thriving demand is leading goldsmiths to work for 12 hours every day instead of their normal shifts of 8 hours. The Indian taxmen continue to tighten the noose on companies falling foul of them. The Directorate General of Goods and Services Tax Intelligence has sent out over 300 show-cause notices to promoters, directors and top management of companies. It has also sought to impose penalties as high as 100% for wrongfully availing input tax credit. These notices, sent to top management in the first week of August for the financial years 2017-18 and 2018-19, are already being challenged by recipients who've moved various high courts seeking stays. The Indian Railways has roped in Germany's TÜV-SÜD to conduct a third-party safety audit of the country's first hydrogen train. According to officials aware of the plan, trial runs for hydrogen-powered rolling stock are expected to begin in December 2024. The Indian Railways will have 35 trains under the Hydrogen for Heritage initiative at an estimated cost of 80 crore per train, with another 70 crore investment in ground infrastructure per route on various heritage or hilly routes. With this, India will become the 5th country in the world after Germany, France, Sweden and China to operate hydrogen-powered trains. The government may soon sell carbon credits for the first time by optimizing logistics activities at the Food Corp of India in a bid to become carbon neutral. Carbon credits, as you all know, are a way to compensate for greenhouse gas emissions. As part of India's food grain management system, state-run FCI has large-scale logistics operations such as procurement, storage, and distribution of food grains, which involve transportation at large scale, adding to emission of greenhouse gases. The FCI is streamlining the entire supply chain operations and services at various levels, including mandis, mills, depots, as well as divisional, regional, zonal, and headquarters operations. This is helping it save cost as well as greenhouse gas emissions by reducing the distance travelled by its fleet. That's it for today. Grab a copy of ET for more. This is your host Anirban Chaudhary signing off. Have a good one.